Good afternoon. My name is Donna Fiesel, and I'm your host of Donna's Edge Talk Show, where truth matters. Thank you so much for watching every day, Monday through Friday from 1 to 3 p.m. Central, as I get to ride home with you in the afternoon. You can find us on radio, icradio.media. Another way you can find us is on television, channel 182 on Charter Communications, and Abundant Television, which is found on Roku, Apple TV, and Amazon Fire. Again, thank you so much for watching every day, Monday through Friday. We definitely appreciate you doing that. By the way, if you would like to send an email, any suggestions, topics, any research you would like for me to do, all you have to do is send an email to donna@donnasedge.com. That's donna@donnasedge.com. So this one was sent in by Allison, and she said, I've heard you talk before about paying off an early mortgage. Can you do that? Yes, you can. And you can do this through going through an amortization sheet, and they're real easy to find. Just find Mortgage Calculator is what it is, and you can find it on any of your search engines. Mortgage Calculator. You'll need a few important things. You'll need to know what the exact mortgage rate you're paying right now, how long you've been paying on the mortgage. If it's, say, 10 years, 20 years, 30 years, whatever, you'll need that. Usually in months is how they want that one put into that category. Then you'll need to know if you made a down payment and exactly what was the mortgage when you went on to purchase your home. So those are easy things to calculate. Then down under it, you're going to see another section. It's going to be if I pay my mortgage off just by making one extra payment per year, how much interest will I be saving, and how many years will I have left on my mortgage? If you wanted to trick the system, you can do that. I'm going to teach you how to do that as well. Yeah, it's a good trick. It's legal. It's no problem. And then if you wanted to pay an extra payment per month, you can do that as well. So it just depends on how fast you want to pay it off. I know people are looking for ways to save money. Everybody wants to be debt-free, and hey, kudos for you for doing that. Absolutely. I'm on your team. All right, so let's talk about most cases when you're paying off your mortgage. But first, let's understand how a mortgage works. Now, you can find all this information right here on debt.org, debt.org, and you'll find everything I'm telling you right now. It's a good website and truthful and honest. Okay, so mortgage amortization is the process of paying off a mortgage loan. Amortization refers to how a payment is applied to principal and to interest. Homeowners make a fixed payment each month, but this payment is allocated to both principal and interest. So in the beginning, most of the payment will go towards interest, while a small portion actually goes to principal. Later, a larger percentage, it just kind of magnifies, so a later percentage will begin to cover the principal, while less goes towards the interest. Toward the end of the loan, most of the payment will cover the principal, as most of the interest will already be paid. So you're paying that interest first. Okay, now you build an equity in your home by paying down the principal. To estimate the quantity, calculate a fair price you feel that your home is worth. Then subtract the loan balance. If a home could be sold, say, for $300,000, and you have $150,000 left on the loan, that means you have $150,000 in equity. So if something unforeseen came up, maybe you had to go to the hospital, didn't have enough insurance, you would be able to use that equity to help pay off your hospital bill. But let's think about other things. Some mortgages come with prepayment penalties. That's the first thing you want to check on when you buy a home. Okay, will I be penalized if I pay it off early? I mean, what if I win PCH, Publishers Clearinghouse? First thing I'd want to do is pay the mortgage off, right? I think you would. And so the highest is usually around 2%. If the loan is paid off the first year, but it can range from 0 to 2%. It usually decreases the longer you've had the loan. So paying off a loan early in the first year can result in a larger penalty than paying it off, say, early in the 4th or the 5th year. How to pay off a 30-year mortgage faster. Now, my son and daughter-in-law did this. Brad and Larissa had a 30-year mortgage, and they had a goal set of paying this mortgage off, and they wanted to pay it off before their 10th wedding anniversary, and they did it. And they used some of these principles to do that. So here are your options to pay off your mortgage faster. That will include paying extra each month, bi-weekly payments instead of monthly payments. And we're going to go into detail and explain to you how this works. Making one additional monthly payment each year, refinance with a shorter term mortgage. You can recast your mortgage, loan modification, pay off other debts. You could also downsize. So let's get into a little bit of detail. We're probably going to have an hour show about this one, so it's going to be really important that you hang in there with me, okay? Because this is important information. Now, if you've already paid off your house, your relatives or your friends who haven't paid their house off, share this show with them, okay? Because you're really sharing a lot of fantastic financial knowledge with your friends and with your relatives. Okay, there are advantages to each approach. So the choice comes down to careful study and a decision based on your financial position and ability to pay will be a higher monthly payment. Okay, so here's number one. Pay extra each month. Let's talk about how that works. So take any leftover funds at the end of the month, anything that you haven't paid bills on, and make an additional principal payment. Now, if you're calling it in to your mortgage, you'll need to say, I'm making a payment. I want you to put this towards principal. That's how you need to do that. Attacking the principal with extra monthly payments actually lowers the amount of interest you pay over the life of the loan. So a common strategy is to divide your monthly payments by 12 and make a separate principal-only payment at the end of every month. Now, what you'll need to do is be sure to label that additional payment apply to principal. Simply rounding up each payment can go a long way in paying off that mortgage. For example, instead of paying, say, $763 a month, you want to pay $800 a month. And you're not going to miss that, okay? Do without a couple of Cokes a day. Do without cigarettes for a while. You'll find that that's going to actually help you make your mortgage payment. Now, another way is to pay bi-weekly. You remember when I said you can trick the system? In a good way. It's nothing illegal. This is completely legal to do. So what you'll do is let's just talk about this first. Around 36% of Americans workers are paid bi-weekly, which aligns with this payment method. So paying bi-weekly means paying half the monthly amount every 2 weeks. This means 26 half payments, or guess what? 36 full payments. This is how you're tricking the system. This adds up to one extra payment per year. And also, this is another thing you need to do. Make sure you check with your bank or lender to ensure that they will accept bi-weekly payments instead of monthly. In lieu of COVID, a lot of banks started doing that anyway. So just to kind of make things easier on everybody. So let's just say that I'll take a double whammy. So let's just say your house payment is, say, $900 a month. Okay, so what you want to do, you can do a double whammy on this one. So you can go on ahead and you can add an extra $100 to this. So in other words, instead of paying $900 a month, you're gonna plan on paying $1,000 every 2 weeks. So this is how the system can work. And this is what you can do. Okay, so and you got to keep it in your head so you don't forget it. Okay, so let's say the first of the month you pay $500. Okay, and then on the 15th, so I always do the first and the 15th. And then on the 15th, you're going to pay the other $500. Not only are you paying an extra $100, but in your mind, you don't understand, you're also paying an extra payment per month. That's how you're going to trick the system. Okay, now let's talk about making an extra mortgage payment every year, which you're kind of doing when you are doing this, when you're paying bi-weekly or bi-monthly. So to make an extra mortgage payment per year, throw all or a portion of new found money. It could be like a year-end bonus or inheritance on your mortgage. The earlier into the loan you do this, the more it will impact, the more of the impact you will have. So in a typical 30-year mortgage, about half the total interest you pay will accumulate in the first 10 years of that loan. That's because your interest rate is calculated against a very high principal amount you owe in the early years. So that's how you're doing that. And that's what Brad Larissa did. So even Christmas, like when they get Christmas money from us or from Larissa's parents or anybody, they would always throw that into the mortgage. And, any bonuses that either one of them got on their jobs, throw that into the mortgage. And they wound up saving over $100,000 total in interest. Isn't that amazing? $100,000. Can you imagine? So their loan was for a townhouse. And now this is years and years ago. This is when you could buy a townhouse for about $100,000. It's a great part of North Carolina as well. So it's a real good area. And so they bought this townhouse for I think it was like $99,000 or something like that. And so now not only did they save $100,000 in interest, that townhouse is probably quadrupled or more in value. So where they paid $100,000, we'll just say $100,000, where they paid $100,000 and now it's worth over $400,000. Not only did they save $100,000, but their place is worth even more. So see, they did the right thing. Now, did that mean giving up on eating out every day? They brown bagged it almost every day. Hardly ever went out to eat. I mean, it's just one of those. Particular about now that it was built really well, insulated really well, so their electric bill was not that high. Of course, they heated with electric, but they were able to do all of this and cook, brown bagging, those kinds of things. Now they set themselves into that pace where now they hardly ever go out to eat. I mean, because they got themselves used to doing that, see? So that's what you have to do. Now, another thing you could do, and let me make sure I've got everything there right. I do. Okay. So you can refinance with a shorter term mortgage. But before we get into this, let's go ahead and go into a commercial break. We'll be right back in just a minute.
Twin City Used Car Sales has been serving drivers in the Northeast Alabama area for years with a quality selection of late model used cars, SUVs, and pickup trucks. On top of our extensive selection and competitive prices, we offer professional auto financing services for used car buyers of all credit levels. Whether you've just begun your search or you're ready to secure your next vehicle, at Twin City Used Car Sales, you will drive away with the vehicle of your dreams. The sales and finance staff at Twin City Used Car Sales looks forward to serving you, and you can apply for financing online before your visit to our used dealership in Gadsden, Alabama. Check us out on the web at twincityusedcars.com or go by our location at 901 First Avenue, Gadsden, Alabama. We sincerely look forward to serving you. At Lamone's Mexican Restaurant, located in Henniger, Alabama, and voted Best Mexican Restaurant of DeKalb County, Alabama 2020, we're here to serve you with authentic Mexican cuisine. Order easily online by going to lamonsmex.com or call 256-657-3999 to place your order. We're open Sunday through Thursday 11 a.m. to 9 p.m. and Friday and Saturday 11 a.m. to 10 p.m. Whether you're celebrating a cozy date night for two or a celebration for a crowd, at Lamone's you'll love our atmosphere and friendly servers. Thank you for dining with Lamone's Mexican Restaurant. At Liberty Bank, we're all about community. Whether it's to help with a charity fundraiser or help families in need, toys at Christmas, or a local football team, we're here for you. You see, we realize the importance of family. Sometimes it's to build a new home or necessary home repairs. We're here for you. If you like the feel of a small town bank with all the conveniences of a big city bank, we're here to serve you. You will find us at any of our convenient locations in DeKalb, Marshall, Etowah, and Blount counties in North Alabama. You can call and speak with any of our friendly staff at 256-659-2175 or check us out on the web at libertybankal.com. And thank you for your support of our community. Member FDIC Equal Housing Lender. Jeff McCurdy of the McCurdy Law Firm has been a public service of this area for over 10 years. McCurdy, a member of the Henniger City Council, serves as prosecutor for the town of Sylvania and was named public defender for the city of Rainsville. The McCurdy Law Firm is located at 17326 Alabama Highway 75 in Henniger to better represent his Jackson and DeKalb County clients. If you need to be represented by a true public servant with proven success, call Jeff at 256-996-8701 or send a private email to mccurdylawfirm@gmail.com. No representation is made that the legal services performed is greater than the legal services performed by other lawyers.
The Hatter Cafe and Country Inn is nestled in the northeast corner of Alabama the Beautiful in the delightful town of Mentone. We're located on top of scenic Lookout Mountain near Little River and DeSoto State Park and located only 5 minutes from shopping and restaurants. There is also a nearby community walking path and golf course. We welcome everyone through the doors and we are committed to outstanding service for all guests. At the Hatter Cafe and Country Inn, we invite people from all walks of life to come and get away from it all, enjoy the open spaces, treetop views, fresh, clean air, and experience Southern hospitality at its finest. We look forward to hosting you. To reserve a special event, or if you would love a special getaway at the Country Inn, you can call us at 256-634-2018. Good afternoon. We are back. My name is Donna, and I am your host of Donna's Edge Talk Show, where truth matters. We're back from break, and I just wanted to mention a couple of things for you. We're talking about paying off that mortgage really early. So the first things we were talking about was how to pay off a 30-year mortgage faster and then paying extra each month. Even if it's only $10, that $10 per month is going to add up. And then also paying bi-weekly instead of paying by the month. And that way you're tricking yourself. You're tricking your own self into paying an extra mortgage payment per month, per year. Pay bi-weekly. Make an extra mortgage payment every year. We talked about that. And then refinancing with a shorter term mortgage. So let's go ahead and talk about that a little bit. So refinancing a mortgage refers to getting a new loan to replace your current mortgage. The new loan can actually help cut monthly cost or pay off the loan quicker than with a new loan term. A shorter term on the mortgage actually means it goes away sooner, but at the cost of a much higher monthly payment and perhaps some of out-of-pocket closing costs. So ask yourself this: can you afford the higher monthly payment of a 15-year loan, or are you better off contributing extra each month to a 30-year payment? So Brad and Larissa found that instead of refinancing and going with a 15-year loan, they were actually better off to stick it out with that 30-year loan and make almost double payments is what they did. Okay, so let's talk about recast your mortgage. Now, what in the world does it mean by recast your mortgage? Recasting your mortgage is an excellent way to lower your monthly payment while keeping your interest rate and avoiding the fees that come with refinancing. So recasting usually charges fees around $200 to $300. It involves paying a lump sum toward the principal amount. The lender then modifies your amortization schedule to reflect your new balance. This is a good idea to lower your payment without changing your interest rate. So let's just say that you got a raise, or maybe you got this big bonus at work, or maybe you received an inheritance of $20,000. Putting that $20,000 towards your payment, your house payment, is a fabulous way to save a lot of money on interest. Okay, now let's talk about loan modification. Okay, so loan modification actually refers to changing lenders to make an existing mortgage. Now, this could mean a lower interest rate or going from an adjustable to a fixed mortgage. These programs are for borrowers that are falling behind on their payments, often due to unemployment, increased living expenses, disability, or other loss of income. That's a good thing to do. A lot of folks were doing that when COVID hit. And also when we had our terrible time in the early part of the year 2000. A lot of folks were losing their jobs around 2016. And so a lot of folks were doing loan modifications. Now, or recasting their mortgage. Now let's talk about loan modification, because a lot of folks did that as well. So loan modification refers to a change lenders to make an existing mortgage. It could be a lower interest rate, again, from an adjustable, because a lot of folks were getting those interest rates where it was an adjustable fixed rate, hoping that it would go down. Some cases it goes down, but generally, I think what happens is the mortgage actually goes up. So if you would rather have a fixed mortgage rate, that would be a good time to do that. They're usually for borrowers, again, that are falling behind on their payments, often due to unemployment, increased living expenses, disability, or other loss of income. Now, let's talk about this one, and it's to pay off other debts. So wise money management means paying down debts with higher interest rates first. So let's say you have 2 mortgages on your home. Okay, in one you did, because a lot of people do this, they got the first mortgage when they bought the house, then they got the second mortgage, and maybe just to make improvements on their home. That's all they wanted it for. Generally speaking, that second mortgage is going to be a higher interest rate, and it can have a balloon effect. It can start out with, say, I don't know, 3%, and it could rise like what's happening right now in the United States. Interest rates are going to continue rising, and a lot of folks are having a hard time paying their bills because of that. So let's talk about this. You may be well paying, say, 18 interest in credit card debt, and then maybe 5% in mortgage debt. So which one do you think you need to pay off first? You need to go with a higher interest rate. Okay, so you'd want to pay off that credit card debt. Payday and title loans usually come with high interest rates and should be dealt with before focusing on a mortgage loan. Those are really high interest. A debt consolidation plan is a smart option if you're carrying several loans. Using a financial advisor or a nonprofit counselor to consolidate your loans could save you some money. Now, I'm going to spell this for you. It's called HELOC, and a HELOC. HELOC is another powerful tool for paying down debt, and also lets you put your home equity to use. So let's just say you've got, boy, I can't imagine this, but let's just say you've got $30,000 in credit card debt. You're going to be so much better off putting a second mortgage on your house, or maybe consolidating that in with your house payment and letting the bank pay off that because you imagine $30,000 in credit card debt. You could have bought a house with that when it's all said and done, because the interest rates are so incredibly high. Please, before you start doing and putting things on your credit card to do home repairs or whatever, make sure you really think about that, okay? And opt out of getting these big credit cards, where they say, oh, you're going to get $30,000. Beware of that. We have a credit card, but we basically use that for expenses to drive to work. It's basically a gas card. So, but I will say this. So my credit card is actually from Capital One, and it's a Walmart credit card. So I do this. We buy our whatever we want from Walmart, we buy it online. Because if I buy it online, I get a 5% rebate. And if I go into Walmart and pay for it using this card, it's 2%. Okay, so, and I can use this Walmart card for everything. I mean, I've used it for several different things before. But the thing about it is you got to pay it down as quick as you possibly can. Otherwise, you're going to get interest, and then it's not even going to balance out. So, again, if you're going to go with a credit card, go with one that will actually give you some money back. Okay? All right, now, wise money management. Again, if you've got any kind of credit card debt, and I'm going to give you this and I'm going to spell this for you again. It's called HELOC, H-E-L-O-C. And you can go ahead and Google that, H-E-L-O-C. It's just another powerful tool for paying down debts, and it lets you put your home equity into use. Now, let's talk about downsizing your home. Okay, so let's say you buy a house you can afford. Another solution would be to buy a smaller house, or move to an area offering more affordable housing. A lot of folks are doing that. There are people who live in big cities, New York, or even in Charlotte, North Carolina. It's going to cost you more to live close to town. So a lot of folks are opting to move into a suburb, move out into maybe buy a farm. A lot of people want to do farms now. And I did it before it got cool. But anyway, you can buy a farm with some land. And actually, a lot of folks are moving into our area from some of your northern states and, maybe selling a very small home, maybe 1,000 square feet, and they're able to buy a much bigger house and also buy land and have some money to go in the bank. So that's pretty cool. To me, living in the city is just not that worth it. It's not worth having such a high house payment and paying so much for a little cubby hole. I mean, it's not my bag. But anyway, a lot of people are beginning to be like I am about that. Okay, so let's talk about downsizing the home. So buy a house you can afford. Another solution would be to buy a smaller house or move to an area offering more affordable housing. So here are some questions you might consider when you're shopping for a home. Number one, what's my budget? That's number one. How much are closing costs? I can rack it up too. Are there any health hazards? Make sure you get someone to check it out. Make sure there's not mold, that kind of thing. Is the roof in good condition? How old is it? Man, that can cost you a lot of money if you got to replace a roof. How old are the appliances? Number one, there, probably in a lot of cases. Is the home susceptible to flooding or other natural disasters? That's another important part. So what you want to do is consult a trusted real estate agent. Talking to a trustworthy, it's really important. Make sure you check them out, okay? They can provide insights into the buying world of home buying. They know how the market works and when and how to capitalize on a buying opportunity, and they are also skilled negotiators. They can haggle a home's price down to its actual value. So what you want to do is optimize your down payment, get the most out of your down payment. A larger down payment means less room for interest to grow. Therefore, you can put it down. The more you can put down, the absolute better it is for you. There's another one called a do-it-yourself method. Okay, this is pretty much what Brad and Larissa did. The easiest option may be to devise your own plan. If it's affordable, and there's so many things out there on the internet that will help you out too that's absolutely free. Perhaps you add a certain amount each month, then make one payment extra per year. Making frugal living decisions can secure funds for bolstering your payments. Shop at discount stores and boutiques. Consider limiting streaming subscriptions, visiting parks and museums, or anywhere with smaller to non-existent admission fees, because you got to have some recreation. You got to do that. You can also add more to the mortgage if your financial position improves via maybe you get a raise or a new job. Brad did that. He got a raise, so what he did was just put that money that he was getting extra per month, throwing that into the mortgage. Okay, so in short, the do-it-yourself plans offers flexibility on how you approach the mortgage, and it definitely works. Okay, thank you so much for watching The Edge. My name is Donna. Donna's Edge Talk Show, where truth really matters. I hope it's been some help to you today. If you have a particular an assignment you would like for me to work on for you, all you have to do is send an email to donna@donnasedge.com, and I'll take care of that for you, I promise. Thank you so much for watching, and I hope you're going to save a lot of money on your mortgage. Let me know how this works out for you. And if you see right off the bat you're saving some money off of interest, let me know about it. I like to hear your successes. Again, thank you so much for watching. I appreciate it.